just seconds away from weekly jobless claims and productivity data. Futures right now, you can see, have been strong all morning. By Rick Santelli is staying by. Some people think, given some of the flaws with the revisions in it, maybe jobless claims is a better look, since we're not really trusting some of the other data, and that's coming up right now, Rick.
Yeah, no, I agree with that, but there's still some states that have quite a variance and probably a wide range of inaccuracy. But yes, I would agree with that. Generally speaking, and non-farm productivity preliminary second quarter look comes in better than expected, up 2.4%. We're looking for a number closer to 2%. 2.4% would be the best productivity level since the third quarter of 24, when it was 2.9. In the rearview mirror, we still have minus 1.5, and minus 1.5 was the weakest productivity since the second quarter of 22. So a nice rebound. If there's any revisions, I shall put them out there. Unit labor costs, a smidge hotter than expected. From 1.5 expectations to 1.6 is the actual number, and that follows a really robust 6.6, which was the most expensive, the highest unit revisions. 6.6 becomes 6.9. That was the worst, going all the way back to the third quarter of 22. And jobless claims for the week of August 2nd, 226,000. That would be up 7,000 because they revised last week to 219,000. Still very well behaved. 226,000 would be the highest since the first week in July, when it was 228,000. This has really been quite compressed. The last time we had 250 right on the nose was the first week in June. The last time we were above 250, you have to go all the way back to October of 24. Now, continuing claims, this is the 11th straight week above 1.9 million. Very much is consolidating right in a very narrow range, 1,974,000. That's a little warmer than expected. Rearview mirror, slight revision from 1,946 to 1,936. But 1,974,000 actually becomes the highest level going back to, believe it or not, November of 21. We keep going back to November of 21. We see that interest rates before this number started to drop a bit. I'm not sure exactly why. I'm not sure if anybody had the data or if there was some trade going on I'm unaware of. But I would say that these numbers are generically pretty good. And at 1 Eastern, we're going to have the last of $125 billion in Treasury coupon supply, with $25 billion 30-year bonds. Also today, a record $100 billion of 4-week T-bills. Joe, back to you.